Now, here's something you don't hear every day from Zero Hedge. Steve, Mnuchin, Treasury Secretary, blames high-frequency trading for exploding market volatility. And as you're about to hear, for the last how many years which this crap's been allowed? Well, markets are rising. We don't care. Markets are now struggling to stay afloat. Yeah, listen, Treasury Secretary, this high-frequency trading stuff is, that's what's doing this. All right, but it was fine on the way up. Everything's cool. It was back in 2014, right around the time Michael Lewis published Flash Boys, that the public's attention first fully focused on high-frequency trading, and when we said that it was only a matter of time before high-frequency trading became the ultimate scapegoat du jour of all that is wrong with capital markets, because since virtually nobody really understands what high-frequency trading does, it can just as easily be flipped from innocent market bystander, which provides liquidity, to the root of all evil, is what they said back then. Zero Hedge. In other words, the high freaks are about to become the most convenient and misunderstood scapegoat for when the market finally does crash, which means that those high-frequency trading associated terms, which very few recognize now, especially those on either side of the pro or anti-high-frequency trading debate, who have very strong opinions but zero factual grasp of the matter, will become part of the daily jargon as the anti-high-frequency trade wave sweeps through the land. To underscore this prediction, we made it vividly clear what would happen. Zero Hedge, March 30th, 2014. Only until market crashes. Then high-frequency trading will be the torches and pitchforks scapegoat, not the Fed. Zero Hedge said that when? March 30th, 2014. Nearly 5 years later, the time to blame high-frequency trading has finally arrived, because during a roundtable interview today on Bloomberg's Washington office, Treasury Secretary Steven Mnuchin blamed soaring volatility in the equity markets on high-speed trading, adding that he planned to conduct an interagency review of market structure. Over a longer period of time, the market reflects various different economic components, but a normal trading day now is a 500-point range. A lot of that has to do with market structure, and that's something we're going to take a look at, he said. So in other words, while for over a decade, high-frequency trading, in coordination with the Fed, of course, were happily bidding up stocks and lifting risk assets higher to everyone's delight, nobody had any problems with the algorithms, that have come to dominate market structure while soaking up liquidity and making the market increasingly more fragile and susceptible to flash crashes, as we discussed most recently this past June. Just 2 months of selling by various quaints, algos, and of course high-frequency traders, and lo and behold, it's time for a comprehensive market overhaul because, it's all the algos' fault. Just ignore the $4.5 trillion elephant in the room, please. And I think they're referring to the Fed's balance sheet on that one. Mnuchin, a former Goldman Sachs, or Goldmanite as they like to call him, and hedge fund manager, told Bloomberg he will ask the Financial Stability Oversight Council, which he heads, to study stock market volatility. Yeah, we need to start. What the F have you guys been doing? What's your job? What have you guys been doing lately? Just hanging out, probably watching porn on their computers like most government officials. Seriously, that's a fact. We need to study this. Guys, this has been going on for 10 years. Boss, this has been going on for 10 years now. What do you mean study it? What do you want to know? What do you want us to do? Listen, we need a damn scapegoat. We need something. Just give me any damn thing. Oh, okay. Well, that's how that usually goes. And there's quite a bit more to this article, but I mean, said it all. Said it all right there. We need a reason. And they'll give you a reason. Oh, here's how we're going to change that. But it worked so great for the last 10 years. What happened? Why did it change? How could these things be making the market go down now if they made it go up for the last 10 years? One way or the other, that crap should have never existed. To be honest with you, it should never have existed. It should never exist. But it does, and it has. So, convenient scapegoat. What I do hope is some of this crap that they do, order stuffing and all this front running, all this crap that they end up doing, is just caught and dealt with once and for all which typically will happen after everything blows up. And then, okay, let's start over. We got new regulation, Glass-Steagall, all this stuff. And then years later, a corrupt president comes in and corrupt other people who are constantly coming into our government. And we'll pick away at that. We don't need that no more. Let's give everybody loans, adjustable rate mortgage. Let's go. Well, what about all that regulation that kept us safe? Wow, who needs that? We need to make money. We need money. All seeing, all powerful, all knowing, but he needs money. So yeah, take care.